Warren Buffett, you only need to know these 7 rules. Looking to learn the secrets of investing like a pro? Who better to look to for advice than Warren Buffett, one of the most successful investors in history. Welcome back to yet another video about the investing legend Warren Buffett. In this video, we are going to learn 7 secrets Warren Buffett has shared that have helped him build a fortune of over $100 billion. With his decades of experience, Warren Buffett has developed a set of principles that have proven to be incredibly effective in aiding him on his journey to financial success. So, let's get into it and see what these 7 golden rules are. Number 1. Invest by facts, not emotions. The legendary investor and philanthropist Warren Buffett is known for his sage advice when it comes to investing. Never one to mince his words, he warns investors not to let their emotions get the better of them. After all, investing is a business decision and should be treated as such, with facts and research, not emotions. Buffett's advice is simple. Have the discipline and composure to not let your emotions drive your decisions. That means no impulsive buying or selling, no letting fear cloud your judgment, and most of all, no overconfidence. After all, investments are risky and no one can predict the future. Even the most experienced investor must always be cautious and keep their wits about them. At the end of the day, successful investing boils down to having ordinary intelligence and strong emotional control. Number 2. Buy wonderful businesses, not cigar butts. When it comes to investing, Warren Buffett has a simple yet wise principle. Buy wonderful businesses at fair prices. This is in contrast to investing in cigar butts, companies that are cheap but have limited future prospects. It's a strategy driven by size, which is why Buffett changed his focus. After a certain point, buying cheap companies on their last legs doesn't work when you're as big and successful as Buffett. The key to Buffett's success has been to look for businesses with large moats, meaning they have an advantage over their competitors. This could be competitive advantages like a unique product or service, excellent cash flow, and great management. This type of company will always be more attractive than one with no competitive edge. It's also important to remember that while it can be tempting to buy a fair company at a wonderful price, this strategy is rarely successful. Buying a wonderful business at a fair price is the best way to ensure long-term success in investing, and this is the strategy that has made Buffett one of the most successful investors of all time. Number 3. Only buy stocks that you understand. Don't chase stocks just because everyone else is trading them. Warren Buffett's third important rule is a great starting point when you're investing in stocks. To make sure you don't lose out, it's important to invest in stocks that you understand and believe because they will offer long-term value. Don't just chase what everyone else is trading, as that doesn't necessarily guarantee success. Even the smartest investors can predict how the market will perform, so you should ensure that you put in the research and understand what you're getting into before jumping in. Investing can be a great way to increase your wealth over time, but you need to make sure that you are being smart about it. Don't just buy what everyone else is buying. Be informed and make decisions that you believe will see a return in the long run. With research and dedication, you can make sure that your investments are sound and give you maximum returns. Number 4. When you see a great opportunity, take it. As Warren Buffett famously said, when you see a great opportunity, take it. Life is full of opportunities that can help us grow as individuals, and it's important to go after them with everything we have. Not taking advantage of a great opportunity is almost as bad as not doing anything at all. We must be willing to take risks and go after the things that we want in life, even if it means leaving our comfort zone. If we put in the effort, hard work, and dedication it takes to reach our goals, then we can reap the rewards of greater knowledge, experience, and success. It's up to us to take those chances and run with them. It's never easy making the decision to pursue a big opportunity. But if we can keep in mind, Warren Buffett has a philosophy that when life gives you a great opportunity, you should seize it. This is brilliant advice for both investing and life. Number 5. Managers must have integrity and talent. When it comes to managing an organization, one must be aware of the Warren Buffett rule. It states that managers need to possess integrity and talent in order to be successful. This rule was further discussed by Warren Buffett himself, who said that he looks for 4 qualities when hiring people: intelligence, initiative, energy, and integrity. Without the latter, the other 3 will not be enough to make an effective manager. Warren Buffett pointed out that one should steer away from people who lack integrity, as they will be lazy and dumb. This is why having a team of people who possess the 3 qualities that Buffett mentioned is essential for any organization. With this in mind, it's clear that managers should be selected carefully to ensure that they have the right mix of qualities to lead a successful team. With the Warren Buffett rule in mind, one should always make sure to pick the right team members who possess all of these qualities. Doing this will help ensure that any organization is well managed and successful. Number 6. Don't sell unless the business fundamentally changes for long-term investors. This Warren Buffett rule is a great piece of advice for long-term investors. It emphasizes the importance of understanding and evaluating companies before you decide to invest in them. By ensuring that the business is fundamentally sound, you protect yourself from making a bad investment decision. The rule calls for investors to be patient and wait for the right time to sell their investments. Selling too soon could result in giving up potential gains or losing out on opportunities. By holding on to well-established businesses, you stand to benefit from any long-term growth that the company may experience. The Warren Buffett rule is an important reminder to think carefully before selling any investments. While it may seem tempting to cash in on a hot stock, you could be leaving money on the table if you don't take the time to really evaluate the business. By taking a long-term view, you'll be better positioned to make smart investments that will pay off in the future. Number 7. Buy at a price below intrinsic value. This requires some fundamental analysis skills. Following the Warren Buffett rule of buying at a price below intrinsic value is no easy feat. It requires one to have an eye for detail and the fundamental of analysis skills that many investors lack. But if executed correctly, one can find immense success using the Warren Buffett rule. Take Warren Buffett himself, for example. As he said himself, intrinsic value is an all-important concept that offers the only logical approach to evaluating the relative attractiveness of investments and businesses. Warren has made a fortune by following this principle, making him one of the world's wealthiest investors. It's not just the famous billionaire investor who has profited from this rule either. Many investors, small and large, have found that they can find great success by following the Warren Buffett rule. So, if you're looking to invest, make sure to take a look at the intrinsic value of a business before making any investment decisions. It may take some time, but it could be the difference between enormous success and huge losses. Following the golden rule of Warren Buffett is a surefire way to become a successful entrepreneur. Each rule is like a little nugget of wisdom, and if you take the time to really understand them, you'll have a better chance at achieving success. Thanks for watching. If you like the video about Warren Buffett's golden rules, make sure to subscribe to the channel so you don't miss out on more valuable insights. Who knows, maybe you'll be able to become the next Warren Buffett.